So as you can tell from the title and you can tell from this first screen, I'm going to be showing you guys how to build out BNF Trading Strategy in TradingView with Pinescript. So if you don't know, BNF was an amazing trader who traded the Japanese market, the Nikon market, from his room, and he essentially was just killing it during the early to late 2000s and early to late 2010s. This man, as you can see, turned 13,000 into $153 million. It's freaking crazy. And the crazy thing is that his strategy was actually pretty simple, and it's pretty much deployed by a lot of people. And if you want to learn a little bit more about BNF's story, I'm going to link this video below, but this video does a great job explaining it. It will be linked in the actual description below, so you can learn a little bit more about it. But my job here is now just to focus on his actual strategy. His first strategy during the bear market, he had two. I haven't figured out the second one, so if I do figure out the second one, I'll create a follow-up video. But we're going to focus on his first video, which kind of like started him out and got him like crazy returns, all right? And when I say it's simple, the reason why I say it's simple is because this is something you see me talk about in previous videos. This is something all algo traders, all quantitative traders use, and that's a simple mean reversion strategy. What's a simple way of thinking about mean reversion? Think about boiler bands. Boiler bands kind of essentially work within the realm of mean reversion. Mean reversion is basically means the theory that asset prices eventually revert to their long-term mean or average levels. So think about the simple moving average or the exponential moving average. Mean reversion is basically saying that prices, if it's above the SMA or below the SMA, above the EMA or below the or above the EMA, it's going to revert back to the EMA because the EMA or the SMA are the mean or the average of the actual price. So it doesn't mean it's a straight line, because you got to remember the mean is not a straight line. It's always changing. It's always shifting. But you're basically saying that a price action will always revert back to that average. And that's essentially what he was trading. If you, again, watch his story, you'll see that's exactly what he was trading. He was trading in the form that prices were way below the simple moving average, way below their simple moving average. I think it was about, I forgot how many basis points, but way below it. And so he traded in the direction of the average. So because it was the bear market, prices were below the simple moving average. He bought into most companies on the Nikon, which is the Japanese stock market, hoping that they would return back to the average or the SMA, EMA, whichever one you want to use. And he was right. He was right. That's how he made his money. He was right off of that. That's the basis of mean reversion. That's the reason why quants love it, algo traders love it. It's a very simple strategy. Now, there are some things you can add in to make it a little bit better. But yeah, it's a really solid strategy. Now, here's my input before we get into the code, because I know most of you are going to take that, you're going to learn what he did, or you're going to see the code and then go run up and go try to make billions of dollars. I want you to watch his stories very carefully, because you would understand the issues. Well, not the issues. There is no real issue, because it typically will always come true, but the real dangers of mean reversion trading. Now, the dangers of it, in my opinion, is the time that it will take. You're going to see in the back test when we get to the back test, but I want to let you guys know ahead of time before you guys jump the gun and try to go do something crazy. I won't feel right. You guys are going to come back to me and get mad at me. I want to tell you the truth. The issue with this strategy, mean reversion strategy, it takes patience. It does not revert to its average the next day. It does not revert to its average next week. It could happen, but a lot of times it takes days. It takes weeks, sometimes even months. If you watch his video, you understand how many days he was just sitting there like about to crap his pants because his positions were down significantly. He just had the resilience to know that it's always going to revert back to its mean, so let me just relax and it will happen. And that's how he made his money. Now, I'm not telling you to do that, because again, you got to understand, he had more money than a lot of us. You know, you got to understand, he had a lot more money, he had a lot more patience, and I'm pretty sure even if he lost his money, he was good. A lot of us don't come from that. That's a level of quote unquote privilege, if you want to say. So please keep that in mind. This is more so a very hedge fundish strategy, and it requires, again, resilience and time. And a lot of you guys, a lot of us are more so into the quick day trading moves. So this is something that you gotta understand. This is a very long swing trade strategy, but it works. It really works. But it's just, you're going to have to suffer those days when you're probably going to be down like $5,000, $2,000, etc., probably more, before it makes the actual move. So that's just, I had to let that be known. You're going to be crying. As you see in this video, you're going to be crying before it actually makes the move you want to make. So now that we have the understanding, we can get into the actual build. All right. So this is where we get into TradingView. I actually have it already here, but I'm going to build it out from scratch. All right. So guys are ready. Let's get it. All right. So of course you got to make sure you have version 5 here for Pinescript. And then we got to get into the actual strategy. So the strategy, and we give it a good little name. We're going to call it BNF Strategy. We're going to call it that. Overlay. We got to equal that to true because we want to show on the chart. So we got to make sure that equals to true. I come from Python, so it's always capital T, but in Pinescript it's lowercase t. Now this is just for commenting. Define parameters. All right. Now, the way you would actually trade this is with a deviation from the mean. So I have a video, I think, on the quant trading. So go back to my quant trading video, the first one. It explains standard deviation a little bit more. But that basically is how many units from the average. So standard deviation would be how many units for the average. And that's why I explained the boiler band, because boiler bands, the outer and upper bands are like 2 standard deviations from the average. And that's essentially what standard deviation is. It's like, okay, based on the average, how many spaces do you want to set the next level? And that's where you get the upper and lower bands. And that's essentially what we're going to be doing here. We're essentially building a boiler band strategy in a way. All right. So we're going to put deviation percentage. I spelled percentage wrong. Equals, and this is where we're going to put the value. It's going to be a float value, because I think we're going to be doing, I'm going to try to do like around 5 or so %. Let's do that. So 5, we're going to title this deviation percentage. I literally have a problem with my spelling. Let's do SMA. Okay. So we're gonna do min val and the steps. So remember I told you steps from the average. So we're gonna do min val. We're gonna put that to 0.1. The minimum value will do. Steps, and that just means steps from the actual SMA. We're gonna do 1. And lastly, to get the float value, you got to divide this by 100, and that's when it's going to be a float. Now, a float just means it has a decimal point, so like 1.2 would be a float. 1 is an integer; it's a whole number. 1.1 is a float. 1.02 is a float. Anything with a decimal point and numbers afterwards are considered floats. If you're not a programmer, floats are something that we deal with a lot. All right. Calculate SMA. Now SMA is pretty easy. We're going to probably do the 25-day. So there is a library already in TradingView for Pinescript. It's called TA, which is technical indicator. I believe that's technical indicator, and it has pretty much everyone in there. But we're just going to use SMA for this one. If you see my first video on Pinescript basics, you're on this page, you understand the TA library, but definitely check it out. So we're doing the close price, and we're doing the 25-day close price for the SMA. So it's a 25-day SMA. All right. Calculate the threshold. All right. And this is where we're gonna just create the upper and lower bands, as I told you. So lower band, and let's call it lower threshold, because I don't want you guys to like highly focus on like boiler band, because I don't want you guys to mess up. I gotta do camel casing, I forgot. I don't like doing camel casing. Again, coming from Python, I do know JavaScript, so this is where I am familiar with camel casing, but I haven't used JavaScript in quite some time. I gotta get back into that. And this is where we're gonna use deviation percentage. Copy that. 1 minus deviation percentage. And this is just gonna be for the lower threshold, or the lower band, if you want to say. And we're going to do the opposite for the higher threshold. Or you know what? Yeah, let's do upper. Just because, you know, I mean, I want you guys to understand like how close it is to boiler bands. So I'm gonna use terminology that would be similar for like boiler bands, all right? And next, let's set the condition by condition. Now understand, what I was gonna say, I literally just lost my train of thought. So again, if you watch the previous video that I had, you understand what TA crossover is. Close lower threshold. So again, it's basically, again, lower threshold is like the lower band. So essentially you're gonna buy when it's on the lower band, because then you know it's gonna revert back to the mean. If it's on the upper band, you're going to sell, and then it would sell back into the mean. So that's exactly what we're doing now. Sell condition. And you can basically say, you basically copy this. Short condition, and that's going to be cross under. It's not weird. Close upper. Now I didn't show cross under because I only showed like mainly crossovers. So again, this is doing with the boiler band. So you know, the two bands, this is going to be dealing with the upper band. So once it goes below the upper band, you know it's going to go down to the mean. So that's where it's cross under. We're saying cross under the upper band. All right. Make sure. Just want to make sure this looks right. I think this is good for now. Just wanted to make sure. Okay. Let's plot. So we're gonna plot it on the chart. SMA value. We're gonna give it a title. 25 SMA. I'm gonna give it a color. Equals color dot red. So yeah, we're just gonna literally plot every one of them here. And we're gonna do a lower threshold, color dot. So the lower thresholds we're gonna buy, so we're gonna do green. Actually, you know what? Let's just make this a neutral color. Let's make this blue or something. Actually, let's make it yellow. Yay. Because I want to make this red, because this is where we're going to be selling, right? So I just want to make it red. Titled upper. Yeah, because I just want to say, I just want it to be like, you know, the common colors that we know. Strategy, enter, exit. All right. Technical difficulties. I think I kept it in just so you guys can see what the hell happened. Anyway, strategy. That entry. We're gonna do a buy. Strategy. That long. And we're gonna put this one long. Condition. I mean, this is just for like extra. You don't need to add this last sentence in comment equals buy. You don't need to do that. It's just for extra confluence, you know. And we put this down here. Let's change this to exit. Close. I think version 4 uses exit, but version 5 uses close. When sell condition. Comments, sell. All right. Strategy, and this is not long anymore. It's short because we did. Actually, I think we're gonna take this out entirely. We're gonna have the long condition. Ah, yes. Okay. So let's do this. Let's try to add this to chart. Okay, we did. Awesome. Okay, so first, before we get to the back test, this is how it works. As you can see, all 3 lines are here. So this is the S&P 500. This is ES minis. Basically the crap. Why am I going blank here? Oh, this is the E micro mini. This is the E mini futures for S&P 500. So as you see, when it comes down here, this will be considered a buy. Goes up there. Consider once it goes under. Consider a sell. And now we can go into the strategy tester to see how it works. As you can see, again, okay, I'm gonna do it to 5 minutes so you can see. So 5 minute, 1 minute, there's no trades. 1 hour, no minute, no trades. 4 hours, there start to be a trade, but it's bad. But when you get to the day, that's when you see trades start to be entered. Only 15 trades. Let's go to the week. Okay, that's for the week. Let's go to a month. See, the longer you give it, I think they typically do it for a day. That's typically how it's going to work. Like you said, it's the boiler bands right there, but that's essentially his strategy. It's a very simple, like boiler band kind of strategy. Once it goes there, it comes back up, and that's essentially how it will work. Pretty simple one, pretty damn simple strategy. But yeah, that's essentially how this whole thing works. Like I said, in the day, it works pretty well. Let's do NQ. See how that does. Same thing, in a day it does pretty well. Let's see how a month is probably gonna. Oh, it does well too. It does better for NQ, but it's only 2 trades. Look at that, only 2 freaking trades, because you know how hard it is for it to make that. As you can see, it's gonna show buy and sell when you get to like look at it at a bigger scale. But you see, it had a sell, had a 2 sell, had a buy, etc., etc. All right. But see, it went above, and then as soon as it crossed below, it got a sell. But that's essentially how it works. Pretty simple strategy. Like I said, it's a mean reversion strategy, but as I showed you with the back test, it has to be days. It has to be days, it has to be months. You know, it has to be a long time frame. It's not going to be intraday like 1 minute. You're not going to see any trades because it's not going to make those moves. 4 hours it made a move. Wow. Okay, NQ maybe. Well, yeah, definitely try this out. See how it works. I wouldn't trade this. Again, like I said, this is a long strategy. This is kind of like a hedge fund level strategy. You gotta have patience, you gotta have capital, and you gotta chill with it. it's a pretty cool, interesting project, but it's crazy that he made this type of returns with such patience. But yeah, it could be done. Like I said, this is a hedge fund level strategy, so this is why it's gonna always fare well. All right, so hope you guys learned a lot. See you guys in the next video. I've got to update the last video, but yeah, see you guys in the next video. If you want to learn how to build strategies like this, you can always sign up for Algo World. It's going to be linked below. If you want us to build you custom strategies like this, we also have a custom group where our developers will build it if you don't feel like coding. So sign up below. All links will be below. Follow me on Instagram, etc., etc. You already know. So see you guys in the next video. Peace.